And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, everyone. It is August the 20th. I'm John Hoagland. Thanks for trusting me with your time. Looking like we're doing okay here. I thought I had a little bit of an issue here, but things look like they're going okay, and I hope they're going okay with you as well. As always, we're looking for accurate context, good risk management, and infinite patience. Lots of... I know, and I felt so bad about that. I was like, I saw you put that in there. I was like, yikes! I guess I was a little too excited, but we will get it done today. As far as economic releases are concerned, we don't have any today. It's at least U.S. economic releases. In Great Britain, they announced retail sales, which were drastically lower than expected. As far as today, we have the opportunity to perhaps to do a little bit of digestion of the technical and fundamental realities in the markets. I'm going through my Twitter feed, and a lot of the traders that I follow on Twitter are the main conversation is capital preservation, and capital preservation. Always thinking about risk management. Are these good traders? So we have again, the opportunity to kind of, I think, sit back, relax, let the market digest some of the information that's come out this week. And, I'm not going to cry if I don't get an execution today, if I don't see anything that entices me into the marketplace. I'm going to be, looking for good opportunities close to points of invalidation. We looked at some of the things in the equities yesterday that did or did not play. We're gonna look at those, and we're gonna review what we were talking about yesterday, especially in the S&Ps. We talked about the late spike. The late spike is telling us that the market might be accepting lower pricing, but it doesn't have to go directly there, which it did not yesterday. But we did lower value, so that's going to be one thing we're going to be checking out on the charts today. Apparently, the Chinese stock index sunk to a 10-month low on threats of the government further tightening regulations. As far as earnings today, we did have a couple this morning of note. Deere and Foot Locker round up the small, but somewhat just a small list of earnings today. We're really wrapping up earnings, both of them beating expectations for revenue and earnings. Crude prices on the path to a 10% loss for the week. Just looking at the open, we did not open with a gap. We're going to look at that very shortly. And as far as the VIX is concerned, it's up another 2% this morning at 22.28. Fear still creeping into the marketplace. The dollar index is 93.68. It's in the upper quarter of the year's range right now, and looking relatively strong lately. The 10-year yield 1.23%. No major changes there. So that's about all the news and stuff I wanted to touch on here before we get started. As always, I have to say good morning to everybody. I just love that. Brett, I should say, Entrican, first in the room, you win the prize. You got a nice comment here. Brian, good, welcome. Glad to see you. George, happy Friday. Hogue and traders. George, thank you very much. Brett, ended the week green. Wasn't much green, but better than red. No kidding, right? Now, to stay more patient and build on the progress. These rules are tight, but it absolutely is absolutely building discipline and making me better. Glad that you recognize that, Brett. That's the whole idea, is give you the tools and help you improve, and we love to see your success. Ricardo, welcome. Good to see you again. Jim, Stacking Bananas, good to see you. Jorg George, good to see you. Nico, Bill Phillips, good to see you. Rob, Laura, Zoraine, Andres, Drones over Texas, good to see you. NM, we're not going to forget the deep breath today. Ocean Blue, good morning. Greg H. Tanya, good morning. James, good morning. Nelson, Jason, Buenos Friday, yes. Ryan, Joe the Future's Scalper, Ocean Blue, wear a hoodie next Friday. Well, I don't know, it's kind of hot for a hoodie. I will probably be wearing my Top Step hoodie as we get closer into the fall and the winter of the year. Ophelia, happy, good to see you. Vince, my man, we're going to get this. Yes, green is good. Fred, the consolidation area pointed out became resistance after the close on Thursday. Good call. Let's do this. Of course, good to see you, Fred, and let's do this. All right, so I don't know if I introduced myself. I was reading what you guys were talking about while I was trying to talk to you, and I can't do two things at once. I can't chew gum and walk at the same time. I'm John Hoagland. Thanks for trusting me with your time. Let's get into these charts. As always, we start for no other reason than left to right with the daily in crude. And let's have a look. All right, so pretty big move to the downside this week, just kind of continuing on what's been going on for about the last month. Right, so we lost 29,000 in open interest. There's only 22,000 left in September. I look so forward to when rollover ends in crude oil, because it helps me paint a much clearer picture for myself. Open interest is still affected by rollover. Volumes overall have been increasing at lower levels. So that's kind of encouraging for a continuation of the downside auction process. So we've got 1, 2, 3, 4, 5, 6 days. 1, 2, 3, 4, 5, 6, 7 days in red. Lots of, fear of demand issues as this COVID variant continues to frighten us, I guess is the right way to put it. Take a look at the 30-minute chart here. So yesterday, we opened with a gap. We were unable to close the gap relatively early. Our best trade location came after the open. We looked higher, we looked lower. We just kind of consolidated for the better part of the day yesterday. Looking at this morning, no gap. Overnight shorts already taking price back towards the settlement price / point of control. They are one and the same from yesterday. It seems as though the new business, the longer time frame sellers that the short time frame sellers were depending on, have not shown up yet. So I'm going to be probably looking for an opportunity, if I believe that this market is in a position that I want to continue to sell strength. This area up here, we've got value high, we've got the high from yesterday, and we've got an overnight consolidation that could represent a supply zone. So we'll be watching our overnight high if we get that opportunity. Right now, I don't want to fight the short time frame inventory adjustment that is occurring. If I'm not in it already, I may just let it go by and look for opportunities as the day goes on. Remember, today is Friday, and it is Capital Preservation Friday. So not too much to really say about the crude oil right here. All right, let's take a look at the S&Ps. Lots to talk about in the S&Ps today. Let's get the daily up. All right, so we showed the kind of time measurement that sometimes markets will sometimes adhere to. We got 21 days from here to here. We've got 21 days from here to here, but now we're continuing that movement to the downside. I think that the value is, has continued to build lower. We're going to talk about what happened yesterday on the 30-minute chart. What I'm thinking of here is, what is our, where are we going to start to build value moving higher? We had open interest higher yesterday by approximately 10,000 on decent volume. Okay, downside always seems to bring bigger volume, but it didn't on Wednesday. Bigger volume, an additional 10,000 in open interest. But the question now is, where did the open interest come in? Did it come in on the downside, or did we find some buyers and build some new open interest on the way back up yesterday? It's going to be very blurry and difficult to see that. Does it look like the downside auction is healthy? For the time being, it is. We have an inside extended trading hours session today so far. The weekly kickoff low, supportive on Wednesday, couldn't close below it yesterday. This is the kind of the what is it I'm looking for? It's a, well, I mean, this is where we're going to be looking for longer time frame traders to adjust inventory. Did they yesterday? Was it to the long side? Was it to the short side? It's an important level. If we can't hold above it, if we can't continue the move to the upside, if we start to accept below it, there's plenty of space down below. Question is, are we going to accept it? 30-minute chart. Okay. So here's the late spike from Wednesday. The market opened below the late spike. Look at the amount of, forgive me. Look at the amount of short overnight inventory is in the marketplace as the market opens up. We open below the late spike, which is acceptance of lower pricing. Doesn't mean it has to go directly that way right then. Our overnight inventory didn't get the sellers that they were looking for. Makes me believe that probably some of this upside and the additional open interest was longer time frame buyers coming in and pushing this price back above this inflection level, and looking for this market to bottom here and then continue to the upside. But until that happens, we're looking at the fact that we've got value moving lower, even on the up move yesterday. Okay, which actually closed when we actually closed higher. Even with that up move yesterday, we're still accepting below or inside the late spike from Wednesday. We have value moving lower, and when value is moving lower, that's telling us, hey, that's something we have to notice. We're not open yet. We have no overnight inventory. We've already taken care of the old business from last night. Now we're going to be looking at new business. I'm going to be looking to try and stay patient as if this market opens up inside value. There's kind of a target-rich environment. I'm looking for some fish up and around yesterday's high, because value high and the last week's low are right in that neighborhood. It's a little bit of a convergence here, and this looks like we may be able to find some fish. And again, direction is in question. Okay, we've got the base of the late spike, which is basically right over here, right around 44.20. That still hasn't been tested. So this area right up here is an interesting area, an area that I'll be looking for opportunities to limit risk to try and get into something. Yes, the line in the sand. That's what I was looking for. It's almost a long above, short below situation. Yesterday, that wouldn't have worked for us. But we had the opening range at the low of the regular trading hour session in the S&Ps yesterday. So that's one sign that says, okay, well, we're not ready to take this dive to the downside here just yet. When the opening range is the low of the session in this type of situation, you don't want to fight it. If you don't want to look for it, if you don't want to go for the opposite move that you might be thinking, then don't do it. You can always look for trade locations as the day goes on that are more in line with your hypothesis. But yesterday that was a tough day, especially in the Nasdaq. The Nasdaq was a real killer yesterday, but it's still we are bringing lower value. Looks like we've running into some buyers here, possibly some of the overnight inventory. It's going to be an interesting trading day today. And again, I'm telling myself that I do not have to trade today. I do not have to. I'm going to be really just looking for the right situation and at the right time. Here's the NASDAQ. The NASDAQ was a killer. The NASDAQ now presenting as stronger than the S&Ps. We took the look below weekly kickoff low yesterday. We actually traded into the value area from the previous day. So looking at this, we lost 3,500 in open interest yesterday. We added 10,000 in the S&Ps yesterday. It is acting a little bit differently. Volume is higher yesterday, lower open interest. This was a far more difficult product to trade yesterday than the S&Ps. To me, it always is. The NASDAQ tends to give me heart palpitations, so it's difficult for me to trade this. Okay, here's the outcome of the late spike yesterday, if we can get this chart up here. Okay, so here's where the NASDAQ was a little bit different. Okay, we opened basically right at and leaving the opening range at the low of the session yesterday, but right at the important inflection level that the S&Ps had penetrated pretty seriously. So the market opens, we have a late spike, we open below the late spike, all of the overnight shorts get out, they attract buyers. This market was so tough yesterday because it went above the late spike, the high of the high of the late spike, the base I would call it, and actually went in and showed signs of acceptance inside value from the previous session. So what made yesterday such a tough trade, I think, in the NASDAQ. If you didn't catch the move to the upside, it was a really kind of a hard day to trade yesterday. Similar situation today. We don't have any overnight inventory. We are in range, in value, but what are we looking at here? We're looking at, a potential view of yesterday's highs. All right, so again, not open yet. We got about, 14, 13 minutes, 12 minutes before that opens. We open with a gap. That may be saying something. Watch the opening range trade. If the opening range trade is the low of the session, we're going to go with it. If we can open this with a gap. Gold. Okay, volume maintaining, just kind of holding. So is price though. We got 5 days of balance here. Very small ranges. Market has been increasing in open interest. Energy building, we could call this, but still very centrally located inside weekly kickoff high and low. The market still appears to be in short time frame control. We're still working on establishing if this is going to end up being a true bull flag or not. Take a look at the 30-minute chart. So here's our bull flag. We've got narrow ranges opposite the bigger picture. We're kind of ping-ponging back and forth between them. We had a look towards it last night. We're in the middle of the range today. I'm going to suggest to everybody, try and stay very patient today. The market opened in range, in value. There's no change in the perception of value of an ounce of gold right now. I'm going to try and stay patient and look for opportunities at the extremes. If we get down near this low of this channel again, or up near the high of this channel again. At this point, it looks like it's going to be just about anywhere. I was going to do something here. So this is the composite of regular trading hour session from Monday's beginning all the way through the entire extended trading hour sessions to this point. The point of control is up here. Well, that's where we put in our overnight high. Our value low is down here. Not interested in trading at this level. It's right at settlement. There's no overnight inventory. So I'm going to be patient, looking for opportunities at the extremes again. So downside structure remains open interest, volume okay, open interest. We added 1,000 in open interest. The auction is indicating that it is still healthy to the downside. We're maintaining volume, adding open interest. I'm going to say we're going to kind of think about, beware the vicious pullback. It's a pretty decent move for the euro and in the week here. On a Friday, there's always the possibility in a directional market of a profit-taking event. Not suggesting that it's going to be today, but the auction does appear to be maintaining health to the downside. So taking a look here at the 30-minute chart, we're going to get a little bit more information on here on this. So yeah, value continues to move lower, volume maintains, open interest increases. This is kind of what I'm thinking about. The overnight inventory was kind of nil. We probably did open with a bit of a gap, and we've closed the gap relatively early. So if we find acceptance inside value, or at least inside the range from yesterday, I think there could be a decent opportunity to the upside, but nothing that I'm going to marry. Okay, this might be a good 2-to-1, 3-to-1 opportunity if it does play out. But again, I'm more into capital preservation today than being very aggressive. Here's the 10-year. Volume maintains, open interest. We lost 30,000 in open interest. It does appear to be somewhat coiling. We've got 5 days of range. Bigger opportunities at the extremes. Take a look at the 30-minute chart, and here's something I want to show you. So here's basically the range that we've been in. The point of control for the 5-day period is basically right where we are now. We're starting to show lower highs and higher lows, which is a kind of a coiling aspect to it, where the market might be building energy for its next move outside of this range. It's in the middle of it right now. I'm really not that interested in getting too involved in this market. It's short time frame controlled. As long as we maintain inside this range, which the profit targets are getting smaller and smaller as we get closer and closer to this apex, the less likely I'm going to be involved in fading these extremes, and I'll be monitoring to see if we can get some acceptance outside those extremes for our next move. All right? So, I get a question here, it looks like from Fred. The overnight low in crude was a poor low. Do you have any thoughts about a poor low in the overnight market for the day's session? Let's take a look. Overnight low here. Yeah, so with the exactness at the bottom here, this is what Fred's talking about. Some people call this a double bottom. In profile, we call this an unfinished downside auction. So, and it is, at the recent low in extended trading hours. There is something to this, Fred. I'll be You're kind of watching to see if we can accept inside value from yesterday. I'm not going to be that concerned about this. But if we have trouble accepting inside value, I see us certainly having the opportunity at some point today to go ahead and take this out and see if we can find some sort of excess along the bottom here. Okay? All right. All right, so let's see what else we've got here. Fred, I'm so happy that you being here and spending a little time with me. You feel like that helps you. That's what I'm here for. That's why I'm here. Every day I trade the I know my experience level is increasing and I'm improving. Market forecasting enriches my experience. My pleasure, Fred. Boy, you are a happy and friendly guy today, and I love that. Hopefully that was going to help you with what we were talking about in the overnight low. And okay, we've got about 3 minutes here before the equity open. Let's take our deep breath. Stay humble, grateful, and creative today. It's the weekend. You make a little bit of money. It's okay to go and enjoy the weekend. Do something very nice for yourself. We work hard at this. We deserve it. Do something very nice for somebody else. It makes us feel good. And by all means, take a moment this weekend to say a prayer for all those that are not where they want to be tonight and tomorrow, and for all those that are in harm's way anywhere in the world. Say a prayer for them. Say a prayer for world peace. Get out there and profit today. You can do a lot of good with the money you can make doing this. Get out there, trade well. I'll see you Monday morning at 8:30. I hope you have a great day and a great weekend. Trade well.